Hi everyone, welcome to the Buffett and Beyond Research Saturday ETF report. And wow, we're back in rally mode again, aren't we? This is February 1st, 2025. And remember, if you want to live on the beach like Jimmy Buffett once did, you've got to invest even better than Warren Buffett does now. And let us look at the sector all-stars, and we are pretty much over here on the right. This is where we were last week, or how far up we were last week. And yeah, we fell on Monday very, very hard. Now we're starting to come back again. So the QQQs are 0.2 of a point away from where they were last week, and the S&P is 0.1 of a point. And down here, our top stocks are down 1.1 of 1%. From last week, just like the S&P, and even but better than the QQQs. So in other words, we've gone up, we've gone down, and we've gone back up, and so here we are once again. But the important point is that with the S&P up 4% and our top stocks up 6.4%, that's pretty darn good. That's 50% more than the S&P 500. And when we look at our top stocks in our ETF portfolio, or NASDAQ 100 ETF portfolio, we have 13 stocks, 13 out of 100, and they are up over 1%, or 1 percentage point since last week. They're up to 7.5%, almost doubling the S&P 500. So this portfolio, which is my favorite portfolio, and it's the one that I have a good chunk of my money in, is doing very, very nice this year, 7.5%. We're just 1 month into the new year. And just to mention that January is a positive month for the S&P, and I'm doing this before market close, so I can't give you an exact amount, but the S&P is up over 3% for January, and as the old saying goes, as January goes, so goes the rest of the year. So yes, I'm looking up for sure. All right, let's look at the QQQs. And first of all, this indicator up here is the stochastics. And some of you say you look at the relative strength index and then you look at stochastics and why one and why not the other. And we'll show you later on. But really, they're giving us an indication of what's going on. Here with the QQQs, we had that big fall on Monday. Let's zoom in a little bit. The big fall on Monday. And then we spent the rest of the week going up. And don't forget, we're at the end of the month, and the first couple of days of the following month, which will be Monday and Tuesday, the market usually is on an uptrend, and that's because there's portfolio adjustments at the end of the month. All the portfolio managers who didn't have the good stocks or the stocks that did well during January will load their portfolios up with the stocks that did very well, so all their subscribers and all their investors can see, wow, you've got all the good stocks. This is great. And then in the first 2 days of the following month, the IRA money and other pension money comes into the market, and that's why you get this upward bias at the end, just about the end of almost every month. So Monday was what they call a pit bull low. So the week of the end of the month, we see a low in the market, and boy, Monday, that was a low. That was just a disastrous day, and that's because the Chinese came out with a artificial intelligence program that worked better than the programs that are developed over here and at a cheaper price, and the whole world panicked. And so anyway, but let's look at this technically here, and we see the market went down. These are the QQQs, which is what? The NASDAQ 100, and it moves just like the NASDAQ does. And we had that big fall on Monday, coming back up, but we're almost at the top where we were last week. But is this indicator up here, this black line up here, is it going to go higher than this? If it doesn't, so like if we get a good day on Monday and maybe Tuesday and we reach this top, or even go a little bit higher, reach the all-time high over here, and this line does not go up but then turns down, this will be a bearish divergence. So that's what we have to be careful of. So even though the market looks very, very good this past week, except for Monday, we have to look at this indicator and see if it's going to turn down before it reaches this area one more time. And the market should make a try at this high in here or the previous high over here, and then we'll see if it turns down or not. So that's going to be a very, very good indicator. And let us look at oil, because we mentioned in our letter about 2 weeks ago that the price of oil should be dropping, and that's because when the new administration came in, it's drill baby drill. So if they drill a lot for oil and gas, the price of oil will come down. And somewhere in there, President Trump talked to Saudi Arabia about lowering prices on oil. Don't know what that was all about, but price of oil has been dropping. That's been a good trade since I mentioned it. Sorry I didn't get in there and actually do it and pull the trigger on that one, but it would have been very good. And yesterday, the president came out and he said he's putting a 25% tariff on imports from Canada, and we're not sure if it will be on oil and gas and timber. Timber is a big export of Canada. So the market didn't know what to do with that news in there, and so it went down a little bit more. But we might be nearing a bottom in here, so we'll see. But this indicator down here is pointing down. So, I mean, it could have room to run down here to the downside. So we'll see. It had a beautiful run up, and now it's having a beautiful run down. It depends, and beautiful is in the eye of the beholder, where you long the market here and short here. If so, you're golden. You can go out this weekend and actually afford dinner. Let's look at the energy, and as oil and gas goes, so does energy, because energy is made up a lot of oil and gas, of course, and it is telling us down here that it wants to go down. It wants to go down further, and you can see we fell below these three moving averages. The red line is the 200-day moving average, and we are below that as I'm recording this, and I'm recording it Friday afternoon before the market closes. And let's look at the S&P 500. Same thing as we were shown before. We're going to try to reach this new high in here, or this old high in here, I should say. So we're trying to reach a new high compared to this high back in here. But is this indicator up here going to agree with us and not give us a bullish or bearish convergence? If this turns down and we have declined a bit, as I'm showing this chart here, we've declined a bit from where the S&P was this morning, so you can see that it's going to be tough to break through there. Up here, this indicator was going up nice, and then it kind of flattened out a little bit. So if this black line goes below this red line, that's a sell signal, and that could be a bad sell. Well, it'll be a good sell signal, but it's bad for those of us who have stocks in the long positions, because what are we seeing? We're seeing maybe a new high here. So we have the line going up, but down here, if this black line turns down, we will have this line going down. New high up here, lower high down here. That would be a sell signal. But we can't project things very well. We just kind of look at them and say, well, those of you who are selling call options, might not be a bad idea to look at previous highs and sell call options a little above those highs, and then you're protected. You're earning a few bucks. And transportation is starting to look terrible, isn't it? We had this nice run up, and then all of a sudden it fell down during this week. And you can see this indicator down here turning down. This indicator up here, the stochastics, also turning down. So the transports do not look very good, and that's not so good for the overall market. Now the technology, well, it's kind of right in between here. The technology stocks are saying, I don't know what I want to do. So it's sitting here right around, the blue line in here is the 50-day moving average. The green line, which is right next to it, is the 20-day moving average. And down here you can see this indicator has flattened out at the zero line. And this may be accumulation, but we have to see a little bit more in here. But it looks not bad, but it just doesn't know which way it wants to go. And same with the semiconductors. This indicator is starting to point up, but this indicator all the way down here is still pointing down, and we are right at the 50-day and 20-day moving averages right in here. In fact, as I'm recording this XSD semiconductor ETF is sitting right between these two lines. Yeah, you need a magnifying glass to see it, but that's where it sits right now. And finance. Yeah, we've been hearing about finance, and finance has been doing very, very good, but we're topping out here, and this is not giving us a signal, but except that we're overbought. This indicator down here might be turning down. Now, let's go back up here. This is the stochastic. Let us look at the RSI, or the Relative Strength Index. Same chart, except this is a different index, and we can see we are topping out. These little high peaks are getting lower, just slightly, while this finance ETF is going higher. So this may be giving us something in here. Let's go back. Yeah, this is saying, okay, we're overbought. How long will we stay overbought? Well, look at this area in here. Not only did it stay overbought for a while, but the ETF, and this is a financial ETF, actually went up. But then finally it broke to the downside. So we're looking at the RSI, and this might be saying, okay, we're getting a little bearish divergence as this line slightly goes down, and this ETF is actually going up. So that's a divergence, but you have to look close to see that. And do we get that close in technical analysis? Well, we just really have to be careful there. But again, we are looking at a higher high right in here, and if this indicator turns down here, we are getting a lower high while we're getting a higher high in the market, a higher high in the market, a lower high in the indicator, and that's a sell signal, folks. So we just have to be very careful in here. Anytime after we come off like a bottom like this and we start rallying and then we get overbought, you know, FOMO, fear of missing out, and this is where some people will buy in. So Monday should be a good day. Tuesday should be fairly good because of the IRA money and other pension money coming in. But after that, we have to see what happens. Because we are overbought across the board. So, folks, we had a rough week starting with Monday, which was a terrible day. And because it's the end of the month and portfolio adjustment and new money coming into the market, there's usually an upward bias on a monthly basis at the end of the month. And that's exactly what we're getting now. And some of the fear of the Chinese coming up with a better artificial intelligence program, but they're using all the chips from NVIDIA and some of the other companies too. So they're using our computer chips, mostly our computer chips. And so the market is saying, well, okay, our semiconductor and technology area just has to get hot because we have competition coming in. And that's what makes innovation so great and happen more quickly. So folks, forget about the market. It's the weekend. Get out there, enjoy yourself, be with your family, be with your loved ones. Have Sunday dinner with your family, but most of all, stay safe, and we'll see you back here in a couple of days.